And in the UK, stocks are falling sharply as investors continue to worry about the broader economic effects of coronavirus. In early trade, the London FTSE 100 share index fell more than 2%, while more domestically focused FTSE 250 dropped 2.7%. Well, let's get more on the intraday numbers from Juliana. Good afternoon, Juliana. How are you doing today in spite of all the bad news hitting the markets?
I'm doing pretty well, Bissy. We're holding on in there. No coughs or colds in this body.
All right. So it's past midday in London, of course. Now, bring us up to speed with the intraday numbers. Are stocks still in the red, or has anything changed?
Still in the red. In fact, red is the colour of the week, colour of the day. And if it does continue as in the way it does, it could be the colour of the month. The FTSE All-Share at intraday is down by a whopping 3.48%. The FTSE 100 is down 3.46%. And the FTSE 250 is down 3.78%. In currencies, the pound is up on the dollar by 0.37%, down on the euro by 0.33%, and down on the Japanese yen by 0.29%. The safe havens are doing exceptionally well. Gold has had its best week since 2011. Lots of people putting their money in gold at the moment, and as well government bonds. Everybody is running there because of the stockpiling. Supermarkets are doing pretty well. So Tesco, their shares at intraday are up 1.3%, and Morrison's, their shares are up by 0.3%.
Now, UK retailers have been warned that they face prosecution if they exploit the coronavirus scare to hike prices for things like hand sanitizers and face masks. How much of this profiteering can the CMA be able to monitor?
Well, they're certainly monitoring very, very closely. They haven't yet cracked down, but they did warn retailers that they certainly will be urging the government to take very serious action if this continues. Of course, a lot of people are panic buying at the moment. So supermarkets, particularly Ocado and Sainsbury's, they've said that, you know, the orders that they're getting are overwhelming them. And because of this, there are people that are taking advantage. So we're not really seeing it in the high street. I think the watchdog, the CMA, have said they're really seeing it online. So places like Amazon and eBay, they're seeing hand sanitizers and other disinfectant items being marked up by up to 2,000%, which is pretty shocking. Of course, if you're, I wouldn't say silly enough, but naive enough to buy it, that's the issue. And Amazon have said that, you know, they're really trying to track down. But the problem with a lot of these online auction sites is it's really difficult for retailers to get a hand in it. But the CMA have gone in now, and they said that they will be writing to the government, and hopefully measures will be taken place next week.
All right, Juliana, talking about next week now, I know that it's been all about the coronavirus in the past week, but how would you describe the week in the UK and a possible outlook for next week?
Well, it's been an interesting week, actually, especially because, of course, on Monday we had the official post-Brexit trade talks kicking off with Fox, the negotiator here in the UK, and the EU's chief negotiator, Michel Barnier. That didn't take or dominate business headlines at all. The only thing we've been talking about is COVID-19, which is pretty strange because, of course, Brexit has dominated discussions in business in the UK for the past 3.5 years. We did find out on the weekend that Prime Minister Boris Johnson is having a baby and is engaged to his live-in newly fiancée, Carrie Sidman. So we did start off on a high, but then, of course, we have all these issues with COVID-19, over 100 cases, a huge spike in the UK. We've been told by the Chief Medical Officer for England and Wales, Chris Whitty, that deaths are inevitable and schools have closed. So there has been a little bit of fear and a little bit of panic. COVID-19 is definitely dominating all discussions. Looking into next week, of course, the big story is the spring budget. We haven't had a budget from this government and from the Conservatives since October 2018, which is an historical time. And of course, not only has Sajid Javid gone, we've also got COVID-19. So there are emergency measures to tackle that. And then, of course, can't forget Flybe. Over 2,000 staff have lost their jobs. Europe's biggest regional airport has almost gone under, the first severe case in Europe of a business collapsing over the coronavirus. And if, and we hope, COVID-19 discussions do simmer, then perhaps a lot of questions and answers will take place about why this regional airline, just a couple of weeks after it was saved by the government, collapsed in such devastating circumstances.
All right, Juliana, in spite of everything, let's just stay hopeful for a great weekend ahead and, of course, a great week next week. Thanks, and we'll see you again then.
Thank you, Bissy.
And stocks in Asia dropped on Friday as volatility continued to grip the markets amid investor concerns over the global COVID-19 outbreak. Japanese stocks were among the biggest losers regionally as the Nikkei 225 dropped 2.72% to close at 20,749.75, while the Topix index fell 2.92%, ending its trading day at 1,471.46. South Korea's Kospi also shed 2.16%, closing at 2,040.22, while the Hang Seng index in Hong Kong slipped more than 2% as at its final hour of trading. Mainland Chinese stocks edged lower in afternoon trade, with the Shanghai Composite down 1.21% to about 3,034.51, and the Shenzhen Composite also slipped 0.74% to approximately 1,915.17. Stocks in Australia also fell, with the ASX 200 dropping 2.81% to close at 6,216.2. Meanwhile, futures this morning pointed to further declines for Wall Street as stocks stateside ahead toward the end of a turbulent trading week. Earlier on, we saw the Dow futures falling 157%, while the S&P 500 and Nasdaq 100 futures also pointed to declines for the two indexes at the open on Friday. The moves came amid a wild trading week on Wall Street, which has seen stocks make big moves in both directions. The 30-stock Dow swung 1,000 points or higher twice within 3 days earlier this week. Well, let's take a breather from those numbers now. S&P Global Rating says the coronavirus crisis could wipe out $211 billion from economies across Asia-Pacific. According to the ratings agency, Australia, Hong Kong, Singapore, Japan, South Korea and Thailand will enter or flirt with recession. S&P, which trimmed its growth forecast for China to 4.8% from 5.7%, says the wider global spread of COVID-19 will prolong the economic fallout in Asia-Pacific and some economic activities will be lost forever, especially for the service sector. S&P says the hardest hit economies will be Hong Kong, Singapore, Thailand and Vietnam, where tourism accounts for a large part of the GDP and are also highly exposed to any supply chain risk in the electronics and autos industries. When Business Incorporated returns in just a moment, we'll drill down on the GDP numbers and the impact on the South African economy. Do stay with us.